Good afternoon, traders in quarantine. Hello Akos, how are you? This is FXPassion broadcasting you live on YouTube, and this is Forex Trading Course 101. Remember what we're trying to do. We're trying to build the three pillars. Number one, we're trying to build a strategy and or a system that we understand and that it's easy to obey, right? Then we're trying to understand risk management, because we can have a great system. If we don't manage our risk properly, we are not going to make it, everybody. And the big one, we are trying to understand how our psychology works, because we could have a great strategy and we could follow, or maybe not, the risk management rules, but we aren't going to make it if we don't have our heart or our head in the right place. So the psychology part is the big one, everybody. Hello Miguel, how are you? And remember, if this is your first time with us, we are in the basic module, market structure, highs and lows and trends. And today, lesson number 9, consolidation inside the terrain. We are going to talk about consolidation. Remember, 90% of traders lose money in the Forex market worldwide, and the webinars are not trading or investment advice. The webinars are for educational purposes only. And for homeworks or questions, you have my Gmail contact, my Skype contact, and my LinkedIn contact. Hello Santano, how are you? That being said, everybody, let's delete a few charts and delete, and let's open a new one, right? Okay, so consolidation, everybody. Now we are in an uptrend, right? Or we could have an uptrend, and inside this uptrend, sometimes, many times, a lot of times, there is going to be a period of consolidation, and the same goes with the downtrend. Sometimes is in the middle between the extension and retracement, sometimes is at the end of the extension, and this is consolidation, everybody. Remember, consolidation on smaller time frames is going to appear bigger, like the consolidation on the higher time frames. And what you must understand, everybody, what we must understand as beginner traders, that we have two types of consolidation. So the number one is we have consolidation inside of a trend, and number two, we need to learn that. Edit label. Number two, we have a consolidation inside of or part of structure. Okay, we have talked about the previous lessons. Hello Sigma, how are you? We talked in the previous lessons about the difference about the short-term trend, everybody, and structure. You need to understand and not mix structure with the short-term trend. Okay, so example, extension, retracement, and you could have here the consolidation, and this is going to be clone one more here and here, or in an up structure, right? Extension, retracement. Look at this structure here. And look at this consolidation, right? So we can have, everybody, consolidation periods everywhere. and anywhere on the 15-minute chart, 5-minute chart, 1 hour, 2 hour, 4 hour, daily, monthly, weekly, we have consolidations. Now, why do we need to learn about this? Because world statistic, 80 to 85% of traders earn money in an uptrend and in a downtrend, but they give it all back when consolidation appears. Okay, this is the world statistic. You can check on the internet. 80 to 80% of the beginner or sometimes semi-professional, you know, traders, you know how to make money in an uptrend, right? Higher highs, higher lows, and you know how to make money in a downtrend. Lower lows, lower highs, and you can use also the uptrend line, right? And in a downtrend you could be using a downtrend line, and I need to like this, right? But then they give it all back when consolidation appears. Hello Giuseppe, come stai? Hello Annie. Right? And there are many reasons, everybody. Now, what do we need to learn is that if we are not able to trade emotionally the consolidation, everybody, just stay out, okay? Now, why is consolidation tricky? Because when consolidation starts, everybody, you could think that the market broke the downtrend line in this example. Or you could be thinking, right, in an uptrend in here, and like this, you know, sometimes it's going to get a little bit out of the range. And you could be thinking, everybody, as a beginner trader, look at this example, uptrend. And let's change the color of the arrow, there you go. Like in here, the market was in an uptrend and then the market stalled. It was making equal lows, equal highs, and because we don't have the crystal ball, right, when this happens, what do you see, everybody? Tell me, what do you see in here? Do you see an uptrend? Do you see a downtrend? What do you see, everybody? And I'm going to move this a little bit lower. What do you see in here? Blue arrow pointing at. Do you see an uptrend or do you see a downtrend? Everybody. And you need to be clear on this, because if you are going to enter in the wrong direction as a beginner trader, you are going to lose money. What do you see? Or in other words, should we go short, should we sell, or should we go long, everybody? What should we do? You can say, well, let's go long because we are in an uptrend. You can say, let's go short because we are in a downtrend and the market broke the uptrend line. What should we do? Both. No, sir. Not both. Miguel, you could be a great politician, right? Sigma, downtrend at the high broke, still uptrend. Okay, Giuseppe, why still the uptrend? Sigma and Santana, why downtrend? Remember, what we are trying to learn from the lesson number 1 is the probability of success. And of course, as Miguel said, you can do both. You can short the market and you can buy the market, but as the market is positioned like this, some trades are going to have a greater chance of success and some trades are going to have a lower chance of success. And which one is what? And why? Giuseppe said still uptrend. Sigma said but not structure break. So downtrend but not structure break. So teacher Sigma, are we going to buy or are we going to sell? Higher low broke, says Santana. Okay. Uptrend since consolidation is part of the trend. Is still an uptrend because sideways it's a part of the trend. Teacher Miguel and teacher Annie, I'm going to ask you a question. Okay, but this is a fact. The market broke the uptrend line. It's a fact, and the market is making lower lows and lower highs, and this is also a fact. So I'm confused right now, everybody. Teacher Miguel and teacher Annie, how are you going to answer to me? You want to go long, but it's a fact that the market broke the uptrend line, and it's a fact that the market is making lower lows, lower highs. Victor says short up. Victor, how is your homework doing? Did you enter any trades today? Victor? Because we are in a side and the side is my period time frame. Sigma is saying we should buy, but we have small downtrend, 2 lows and 2 highs, but did not break structure yet. Yes sir, so what does this mean? That this uptrend line, it doesn't mean anything, everybody? What should we do? And again, all of you are right. The question is, can you sum up different pieces of information, everybody, and come out with an answer about the probability? So this is structure, all of you are right, the market didn't break structure, so extension, retracement, another extension here, another extension here, and another retracement here, right? So all of you are right. Now the question is, can you sum up all the information and come with an answer? What is better? Is better to go short, or is better to wait, or is better to go long? Miguel is saying but did not break the structure. Victor is saying and also the greatest force is up. Yes, buy. It is an uptrend because the uptrend is higher than the first structure low. Okay, trend still valid and we should enter in favor of the trend. Miguel, you gave the best answer. Can you be more specific? How can we enter in favor of the trend? So everybody talking about probabilities, it's better to go long than passion. Can I short the market? Yes, you can. You can short the market. We talked about yesterday, it was the, I don't remember if it was AUDJPY, the example. You can short the market, but remember that this is going to be a risky trade. Remember, this price movement, it's kind of making lower lows, lower highs, and broke the uptrend line, but nonetheless we are still in an up structure. So talking about greater chance of success. And one more we didn't learn yet, but we are at past support in here. Another point to get in consideration, we are at past support. So the greatest chance of success, or let's use another vocabulary, everybody, if you want to have less technical risk, you should go long. Okay, you should go long. Now, how can we enter in favor of the uptrend? What should we do? Miguel, teacher Miguel, how can we enter in favor of the uptrend, up structure, whatever? And again, Passion, can I short the market? Yes, you can. Just remember that you are going against the uptrend or maybe against the up structure. The same rule apply, and as you can see, everybody, as soon, let's go back in red, as soon, blue, okay, as soon you short the market reversed and went up. And this happens, this is market behavior, everybody. We need to learn this as beginner trade. This is how the market works. The market sometimes is going to break the uptrend line, being sideways, you know, hit your stop loss if you want, and then reversed and go back up. And talking about consolidation inside the trend, everybody, let's move this quadrant. Let's move this quadrant here. Okay, this is the example right now. Clown. This is the example, and we have this sideways movement like this, you know, like this. So where should we enter the market buying, everybody? So this is trend continuation, right? Trend continuation. And Miguel said we should enter in favor of the uptrend. Where should we enter, everybody? So can you short the market? Yes, you can, but remember that you are going against the greatest force. You are going against the uptrend, or you are maybe going against the structure. Miguel is saying probably it's better to wait till the end of consolidation and then enter long from the lower band. Great answer, Miguel. So Miguel is saying, everybody, that it's less risky, we still have risk, is less risky if we buy. Miguel said let's wait and then buy again from the lower band, right? If this happens, right? So let's buy here, right? And another question, why shouldn't we buy the quadrant, everybody? Why we can enter here, we can enter here, we can enter here, why shouldn't we enter here? And this happens every day long, on all time frames. You have these examples. You have now consolidation on Canada JPY daily chart. You have consolidation on GBP CAD weekly chart. You have consolidation on the monthly Canada CHF, USD CHF. And you have this kind of market behaviors, patterns, all day long. And we want to enter with high probability, so this is an okay entry, this is an okay entry. Quadrant, this is a bad entry. Who knows? Why shouldn't we enter here? Santana is saying, if the lower time frames start to make higher highs and higher low, we can enter. Yes, sir. Annie on the bottom of the channel. Yes, Annie. So, everybody remember, I have a 20 seconds delay on the chat. Why shouldn't we enter on this quadrant? It is a fake out. Because of the stop loss. We want to go long, right? Nakos, it's a fake out when you see it, but when this happens, you see this. How do you know that it's a fake out, Hakos? Everybody, why the circles are a good entry? Why the quadrant is a bad entry. You should not enter when the quadrant happens. Giuseppe said could be a real break. Great answer, Giuseppe. Sir, I have millions of quotations about structure. We have more time frames, but how to match it correctly? Sometime I see 4 hours same structure, 2 hours same structure. Sigma, you are going to learn this in multiple time frame trading. When you see this, which time frame should I use? Identify trend. If you can explain, sir. Sigma, this is the multiple time frames lesson, but we are far away from now. I mean, we are far away from this lesson right now. We are learning step by step. But a short answer would be you need to define your trading time frame and confirm your confirmation time frame. Okay, Sigma? But try to find out the lesson about multiple time frame trading. Everybody, back to the question. Giuseppe gave an answer. This could be a real break. But even though the market reversed, why shouldn't we enter? Look at this smaller quadrant. Why this is a bad entry, everybody? Look at the smaller quadrant. What do you see here? Why the circle is okay and the circle is okay, and the market went down, reversed, make a high? Why still a bad entry? Look at the small circle. Yeah, no problem, Sigma. The trend there starts with lower high and lower low, so it can be start. Any, congratulations to you. Everybody, Annie gave the complete answer. Why is this a bad entry? I say, passion, but this is the same. No, it's not the same. Here the market went down and went up, and this is a high, this is a low, this is a high, and this is a low. But we have a different picture. Need to retrace again. Yes, Akos. So what Annie said, we have lower low, lower high, lower low, and even when it reversed, we still have a lower high, everybody. Can you see the red price movement? Can you see the red price movement, everybody? So the smaller quadrant, the market still made a lower high, right? Okay, now one more and then we're going to back to theory. Why shouldn't we enter in the middle of the range? Red quadrant this time, everybody. Why is this entry bad? Or is it bad? I'm going to delete this one, delete the circle. Right, so why should we enter here? We have an answer. As Annie said, the trend start with lower low, lower high, and could be start of the downtrend. Right, because we don't see this when this happens, we are seeing just this. Right, now we are here. Can we enter in the middle of the range, everybody? Is this a good entry or is this a bad entry? What do you think? And one more, and let's write this down, and the same rules apply in a downtrend, everybody. If we buy the bottom of the consolidation going in the same direction as the trend, where should we put the stop loss? Everybody, so question for you, teachers. If we buy the bottom of the consolidation, those two circles, and we are going in the same direction as the trend, where should we put the stop loss? Ako says between the two bands is more risky. Yes, end of extension. Yes, so this is also a bad, right? And let's talk about stop loss, everybody. Independently where you would buy, where should the stop loss go? And should I put my stop loss 10 pips below the band? Or should I put my stop loss 10 pips below the most recent low? Or should I put my stop loss 10 pips below the most recent high or low or structure? So let's put a number. What stop loss is best, everybody? Is the stop loss number 1 is the best? Is the stop loss number 2, edit label, stop loss number 2 the best? Or is the stop loss number 3 the best? Stop loss number 3. Which one is the best stop loss, everybody? The stop loss should be 15 pips below the lower band. Should go. Ako says third. What do you think, everybody? Think and put. There is no right or wrong. All the stop loss levels are okay. There is some difference. Some are better, some are... Okay, about the stop loss, everybody. Concept about the stop loss. And this is one of the psychological concepts, everybody, that beginner traders struggle. Okay, concept about stop loss. Try to learn and integrate this. You don't want the market to stop you out. And you are thinking, man, but this is simple stuff. No, it's not. This is the single most important concept that beginner traders don't understand. You know, oh, but I want a tight stop loss. Man, you don't want the market to stop you out. You have the stop loss as protection, but you don't want the market to stop you out. This concept, everybody, is that easy that you could be rejecting, or you could, but this is BS, you know. Oh, but I know this. I know this, but then I'm asking you, where are you going to put your stop loss? And you say, well, I'm going to put the stop loss on number 1. You don't want the market to stop you out. And one more, everybody. You could have, it's a concept, okay? If you risk 1% per trade, and if you lose 10 trades, you have lost 10%. And then is bye-bye account, everybody. The majority of the beginner traders, oh, I don't want to lose a lot of money, I'm going to put the stop loss on number 1. And the market is going, of course, is going to stop you out. And you put the stop loss on the 15-minute chart and 1-hour chart and 2-hour charts, you know. Oh, I'm going to enter this candlestick formation and I'm going to put a tight stop because I don't want to lose too much. If you risk 1% per trade and you put a stop loss too near, you are going to lose 10%. Try to understand this, everybody, especially if you are a beginner trader, when you are thinking where to put the stop loss. Remember, Passion said you don't want the market to stop you out. Okay? We are going to have a lesson on stop loss, but we are talking about right now. Okay? The one most single important factor in trading is the use of the stop loss. And going back to the previous, what we talk about is, yes, the correct answer, everybody, is stop loss number 3. Stop loss number 3 is the best place. Stop loss number 1 is not the best, right? Why not? Because the market can break, as Akko said, could be a false breakout. So the market is going to take you out and is going to reverse. Stop loss number 2 is a little bit better, but as we said, if this is extension, let's color code like this. If this is extension, and this would be the extension, the market can retrace until here, green line. So the best place, everybody, to put the stop loss when you have, is not if, but when you are going to have a consolidation inside a trend, okay, and if you are going to trade consolidation, put the stop loss down here, not down in here. Put the stop loss on number 3. You are correct, sir. I lost more money because I always try to put small stop loss. Yes. Stop loss. A small stop loss. Yes. And again, we talked about many times, it's a different strategy, everybody. If you're a scalper, then you are going to scalp the candlestick formations, then the stop loss is okay, but scalpers go 1-to-1. They risk $1 and they are going to earn $1. Those are scalpers. All the other population, swing trading, day trading, position trading, strategy trading, whatever, I don't know the names, I don't remember, those are the stop loss levels, everybody. Okay, and to finish the subject, everybody, if you enter here and if this is your stop loss, where is going to be your take profit? Your take profit level, everybody, should be up in here. Why is that? This is a non-negotiable rule. We explained to you, if you are going to risk €1, $1, 1 yen, you should earn back $2, €2, 2 yens. Okay? And talking about consolidation, everybody, why is this challenging emotionally? Why is this world statistic works? Why this world statistic works? That 80 to 85% of traders earn money in an uptrend and in a downtrend, but they give it all back when the consolidation appears. This is why. You bought the circle, you bought the lower band, everybody, right? And you have your stop loss down here, below structure, and your take profit is far away, right? It's up in here. And then what starts? The market starts to move up and you're happy, and then it starts to move down and you are angry, and then starts to move up and we are happy again, and it moves a little bit down and we are anxious, and it moves up and we are happy, and it moves down and it's breaking the lower band and we get anxious, and then finally when it's moved up, right, we are happy again, and what do? We mess with the trade, right? We mess with the trade. If this was the example, 80 to 85% of traders close the trade in here. And when you close the trade, everybody, you just enter a trade where your profit was lower than your stop loss, and the other bad thing is you are forming bad trading habits, and this goes into the psychology circle from the beginning. Every time, everybody, listen to me very carefully, every time that you made your plan, and your plan it's okay, you analyze the market, you identify the uptrend, you identify the sideways movement, and you enter the trade, I'm going to delete this one, and you enter the trade in here, you have your stop loss in place and you have your take profit in place. Until here it's okay, but as soon as you start, you know, the market went sideways, and the market is sideways, man, and the market broke the consolidation. Oh my god, I'm going to lose money. Oh, the market is moving in, I'm out. As soon as you start doing this, the first trade, the second trade, the third trade, you are start making and forming bad trading habits, everybody. Yes, Miguel, the worst is that we make bad psychological habits. And when the habit is formed, who is going to help you? Everybody, let's be honest, okay? 90% of beginner traders, if you check their accounts, if you check maybe your account, you are going to see what? Profit of 1, 2, 50 cents, $1, $2, $8, 7 euros, 12 euros, and then you're going to see the loss, minus 22, minus 17, minus 32, minus 50, minus 11. This is a bad psychological pattern, everybody. If you check your account and if you see those numbers that you are taking small profits and you are letting your losses run, you are, as Miguel said, you are in a bad psychological habit. So, passion, what should we do, right? What should we do? You should stay still and firm and strong, and I'm sorry to tell you, and suffer and wait, because the market sooner or later is going to break the sideways channel and hopefully is going to hit your take profit level. Amen. Amen to that, said somebody on the other streaming platform. You are not going to see this on YouTube, right? So you could have the right plan, you could have the right strategy, you enter at the right place, everybody, and you have your stop loss in the right place, and you have your take profit in the right place, and you are going to lose because you are going to suffer here emotionally, right? The market is going up a few pips, oh, I'm happy, and the market is going down, man, I'm anxious, you know. This is why you are hearing this a lot of time. Professional traders are non-emotional, no emotions, you know. And of course we need to manage our trades, but the best way to go, if you're a complete trader, everybody, a complete beginner, enter here, stop loss here, take profit here, and you close your trading platform and check tomorrow, check the next day what is going to happen. And if you see that the market is breaking the lower band, just close the platform, close the chart, and go back to see what is going to happen in 2 days. This is the best you taught me in all these years. Yes, Miguel, thank you. The question is, are you improving this? You are right, boss. Akos, you are the boss, not me. You are the boss. Everybody, so you need to work on your bad habits, and the good news is this is normal, you know. We all have this, we all had this, but you need to train your emotions. This is just training, right? Nobody was born a trader. You are going to build yourself into a winning trader or maybe into a losing trader, you know. Either way, trading habits are a big part of this. Okay, so stay in the trade. Now let's look at some charts. AUDJPY, everybody, daily chart, AUDJPY. And I'm going to show you where I suffered. I'm going to show you, because when you suffer like a horse, you know, I suffered in here, everybody. This was the consolidation in March 2019. Passion, how do you remember? It's easy. I suffered and I lost patience, everybody. Look in this. I shorted the market, everybody. I shorted the market in here, and my stop loss was up in here. And this is the daily chart. And you know, the market was going up and down, and then it went out of the upper band. So I stayed in the trade, patient, you know. I short this candle here on the daily, the first one, and this is the daily chart, everybody. And then on the next day I was happy, you know, the market just fall, and I was happy. On the third day the market went back. I said okay. On the fourth day the market went against me. I was at break even. The fifth day I was in the red. Sixth day I was in the red. Seventh day break even. Day number 8 break even. Day number 9 break even. 10 red, break even, in profit, you know, in profit, in profit, in profit, in profit, still in profit, still in profit. So man, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 1, 2, 3, what was this, February, March, a month and a half, everybody, a month and a half. I stayed in this trade for a month and a half, suffering as a horse, I don't know how is the correct English, but I was in this trade and I was suffering as a dog, you know, or as a horse, or as a cat, I don't know the right animal. And then the market broke the band. Guess what did I do? Guess what did I do up in here? After a month and a half, everybody, and this is what is challenging as a beginner trader. Sometimes even we are all humans, right? We are all humans. Where was the April? March 2019. March 2019. Okay, so this was it, everybody. On the weekly chart, this was the consolidation, right? So this is the challenging part. You analyze the chart and you are the best analyst, right? You are the best analyst in the world, and you analyze the chart and you analyze you have a down bias, and you have a down direction, and you have a downtrend, right? The market's making lower lows, lower highs, lower lows, lower highs. Everything is down, everybody, right? Everything is down. You have a down. The market broke the uptrend line, so we are in a downtrend, and you have a down structure and you have a downtrend, and then this consolidation happens, and you say, well, I know how. So I suffered for a month and a half, knowing that this market is going to push down, and that this market, it must push down, right? And of course, no guarantees. I don't have the crystal ball, but technically speaking, everything is pointing down. Guess what did I do up in here? Did I stay in the market or did I close my trade? After a month and a half, what did I do, everybody? Did I stay in the market or did I close the trade? And remember, I was in this trade for a month and a half, and a portion of my margin was in this trade. What does this mean? Why is the consolidation, why do we suffer in consolidation? Because every trade is going to eat a portion of our margin. And you are going to see different currency pairs shooting in an uptrend and shooting in a downtrend, and you are going to think, man, I could be profiting on those currency pairs. And I'm stuck in here, you know? Yes, Victor, I closed the trade. And I knew that as soon as I'm going to close the trade, everybody, what is going to happen? You stayed in the market. Miguel, no, I didn't. It was even for me, it was too much, you know. I said, what the heck, if this market didn't go down in a month and a half and it broke the upper band, this sucker for sure is not going down. There is no chance this sucker is going down. But as soon as I closed the trade, guess what happened? And he's saying today, just right now with this currency, you see here there's some problem. I'm short in this currency at this moment, and I'm thinking, what should I do? And you should be long on AUDJPY, not short at this moment. Okay? You should be long. And why? The reason is the Fibonacci. The Fibonacci is in the so-called retracement. It's moving from the B to the first level of retracement. Yes, Akos. And this is the funny part. When you have years of experience and you do this on every time frame, I said, guess I'm going to close this sucker. There is no way this is going to fall. And as soon as possible as closed, look what happened, everybody. Look what happened. I should have stayed in the trade. And after a month and a half, I was so angry with this currency pair, everybody, that I closed it. And I didn't want to watch AUDJPY for a week. You know? Because this happened, and it happens all the time. You know? This is why we are telling you, where are we? We are telling you, don't do this. You are forming bad. And of course, it's understandable. If, oh, Passion, I just closed. I know, man, I know. I know, my friend. I know, this is suffering, you know? Especially if you are on the daily chart. You could be on the 1 hour chart, 2 hour chart, you are still going to suffer, you know? But what should I do? I should stay in the trade, because the market then dropped finally, you know? So, what else can we do as beginner traders? Concept. We need to learn concept. We need to learn that consolidation periods are a normal part of trends and are to be expected. This is one of the most important things you can learn today, everybody. Consolidation periods happen on all time frames and on all currency pairs. And you need to integrate in your psychology. Consolidation periods are a normal part of trends and are to be expected. Okay? In conclusion, what I hope that you learn today, everybody, is number one, when you see consolidation, if you're going to trade consolidation, trade in the direction of the trend. So here it's better to go long, here it's better to go short. And here, talking about structure, here it's better to go long, and here it's better to go short. But remember, when we are talking about structure, you need to see a change in the short-term trend before you enter your trade. Don't mix structure with the short-term trends, right? Why is that? Because this could be this one. So this could be somewhere in here, you know. So this is number one. Number two, what I hope you learned today, everybody, is the use of the stop loss. Where to put the stop loss. Number three, what I hope that you learned today is once you enter, stay firm and stay strong and don't mess with the trade. Because I'm telling you, as soon as you are going to close, the market is going to reverse and go in your way. It happens all the time. It happens to me all the time. You know, oh, passion, but it's difficult. I know. So everybody, this is the world statistic. 80 to 85% lose money in the sideways movement in consolidation. What is the easy solution is don't trade consolidation. Simply don't trade. Go find another currency pair or go find another time frame and trade the uptrend or trade the downtrend, you know. Don't trade consolidation if you are not emotionally strong enough. Why is that? Because you are going to form bad trading habits, everybody. Okay? And number four, learn that consolidation periods are a normal part of trends and they are going to happen and are to be expected. Okay, so you can prepare yourself. It doesn't matter what time frame, it doesn't matter what currency pair, the consolidation is going to appear. Okay, everybody, this is it for today. Watch these webinars over and over and over again. This webinar today has the 4 points you need to learn as a beginner trader in order to improve, in order to move on with your trading. So consolidation, stop loss, trading habits, and psychology. Okay, see you back tomorrow, everybody. Stay strong and trade with passion. This is FXPassion signing off.